Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't have to, and today we are looking at the top 7 stocks that can literally 10x in 2022. These stocks are going to consist of growth stocks as well as dividend stocks, and these are going to be very safe stocks because we want to invest into safe stocks that can 10x because the Federal Reserve is increasing interest rates at least 3 times this year to keep inflation under control. So with that being said, let's jump right into today's video. First up, we have a Nextdoor, ticker name KIND, ticker symbol KIND. The current stock price for KIND stock trades at $5.60. The low-end analyst price target for the next 12 months is $10. The average price target or median price target for the next 12 months for KIND stock is $13, and the high-end price prediction, according to analysts, for the next 12 months is $16 per share. However, according to this article, we have a 10x price prediction for this particular stock, and that is going to come in at $58 per share. Nextdoor is a platform that connects neighborhoods together, and it already has 33 million members across the United States. If you didn't know, the company went public in a SPAC merger, also known as a special purpose acquisition company, back in 2021, and ever since the company became a publicly traded company on the stock market, it has been performing very well. Nextdoor is an app that connects people in real-life neighborhoods with one another so they can communicate to see their updates about what's going on in the neighborhood, what's happening near your house, and is there any riffraff happening in our community. This is meant to bolster and make communities stronger, especially since multiple people are experiencing lockdowns and are locked inside of their house. This is a way that they can stay connected with their communities and neighbors. This is an extremely fast-growing company because in the third quarter, they saw a 66% revenue increase to around $52.7 million in a single quarter, which is fantastic news. The number of weekly active users also increased by around 20% all the way up to 33 million active users, and overall, this company has a very strong management team because their CEO used to be the CFO or Chief Financial Officer of Square, which is now called Block, which is a fintech company, and he was also an analyst at Goldman Sachs. So overall, Nextdoor is anticipated to experience fantastic growth. It's a relatively safe company, and it's anticipated to grow up to 10x in the near future. Next, we have more of a blue chip company, like some others on this list, because we want that safety while the Federal Reserve is increasing interest rates, so we want to invest into companies that are safe, but will also give us fantastic returns. And this particular company is McDonald's Corporation, ticker symbol MCD, which has a dividend yield of 2.02, which is not that bad. Currently, the MCD stock trades at $257 per share. The low-end price target among analysts for the next 12 months is $238. The average price consensus or the median price consensus among analysts is $283, and the high-end price prediction for the stock is $314. However, according to this article, McDonald's stock could 10x to reach $2,579. And if you didn't know, McDonald's is a food and drink company, and they also own loads of real estate, which is why we have such a good dividend. McDonald's is a fantastic blue chip stock to own because it has been around for decades and it has really stood the test of time. By the way, if you see a green check mark next to a company, it means that I personally am invested into this company and that I believe it's going to be a great future investment as well for long-term growth. McDonald's is known as one of the safest stocks to buy on the stock market because of its consistent growth and its very good dividend income that it gives to investors for just owning their stock. McDonald's has around 35,000 locations worldwide, and inflation is not a problem for this particular company. The reason being is because McDonald's will actually thrive as inflation increases, or if the Federal Reserve gets inflation under control, and this is what I mean. In a recent earnings call, McDonald's reported a dramatic increase for their overall profits and their revenues. In the third quarter, the profits came in at about $2.86 per share, which is phenomenal. This is a very impressive increase from last year's figure of $2.35 per share. On top of that, McDonald's has raised their forecast and overall revenue growth on top of their sales for the entire year of 2021. The company's net sales increased by 14% up to $6.2 billion. Imagine bringing in $6.2 billion in a single quarter. That is absolutely insane. I also want to say that the company has increased their worldwide sales growth by around 12.7%, and the reason why the company is growing so spectacularly is because they have raised their prices very slightly on their menus, and this in turn has increased their overall revenues and profitability. Next up, we have Caterpillar, ticker symbol CAT, and Caterpillar also has a decent dividend, coming in at a dividend yield of around 2.12. Currently, Caterpillar's CAT stock, ticker name CAT, currently trades for $203. The low-end price prediction among analysts is $134, the average price consensus is $231, and the high-end price prediction is $290 per share. However, the 10x analyst price prediction is $2,045, and we will discuss why they could reach that potentially in the next few years. This company manufactures construction and mining equipment, and they are one of the world leaders in this particular regard. Caterpillar is expected to have major profitability this year because its earnings and free cash flows are expected to literally be at all-time highs, and it's anticipated to break records. The reason behind this record-breaking statistic is because of the $1.2 trillion infrastructure bill that was signed into law by President Joe Biden, and this is going to bring new federal investments in infrastructure, which is going to need and rely on Caterpillar's equipment to have this infrastructure built. So this is a fantastic short-term catalyst for this particular company. Caterpillar has also recently announced their sales and revenues, which have grown by around 25% respectively from their 2020 revenues of around $9.9 billion. Next up, we have Park Hotels and Resorts, ticker symbol PK, which offers a dividend yield of around 2.62. The current stock price for the PK stock is $18. The low-end price target is also $18. The average price consensus is $22.60, and the high-end price prediction is $28 for the next 12 months. However, the stock does have a 10x price target of $200 per share. This is a real estate investment trust company, also known as a REIT, and their portfolio consists of hotels as well as resorts. This company has properties all over America, and it was actually formed from an offshoot of Hilton Worldwide back in 2017. Now, what's really good about REITs and why this has a really good dividend is that REITs have to distribute at a minimum of 90% of their overall profits as dividends to their shareholders, or they will lose tax exemption status when filing taxes. Their revenues did fall very sharply in 2020 because of the lockdowns. However, since then, the company is on a fantastic recovery path towards profitability. Speaking about dividends, we have another stock that has a huge dividend of around 8.16, and that is none other than AT&T, ticker symbol T, which currently trades at $24.24. The low-end price target is $19 per share, the average price consensus is $29.68, and the high-end price prediction for the stock is $41. This company has a 10x price prediction of $242 according to this article, and this is a giant telecommunications company. The most bullish news for AT&T is that they announced a merger agreement with Discovery, and as a result of this merger, AT&T could receive an amount of $43 billion in an all-stock transaction, which will be used to reduce AT&T's debt by $43 billion so it can invest into broadband. AT&T also plans to spend around $24 billion on capital expenditures in 2022, and this investment is going to go toward things such as 5G and fiber broadband networks. Currently, AT&T has a plan to cover at a minimum of 200 million people with its 5G C-band network by the end of 2023, so this is a fantastic 5G play to get in on. Also, some other 5G stocks that you might want to look into would include T-Mobile and Verizon. Now, I do want to say that management has recently cut AT&T's dividend because of the macroeconomic factors and the lockdowns and various other things that happened in the year prior, which means that the company will lose its dividend aristocrat status, but nonetheless, this company still has a fantastic dividend, and it also has future growth potential due to its 5G networks. Now let's move on to our next stock, which is Salesforce, ticker symbol CRM, and of course this has a green check next to it because I am very bullish on this company. The current CRM stock price trades for $227, the low-end price target is $211, the average price consensus is $322, and the high-end price target is $385 for the next 12 months. However, this company has a 10x price target of $2,300. This company specializes in customer relationship management. So basically, Salesforce offers the institutions or small businesses that purchase their products, and they help them improve their marketing and customer relationship strategies. Salesforce has undergone fantastic acquisitions in recent years, such as buying Slack for $27.7 billion. They bought Tableau for $15.7 billion, and they also bought MuleSoft for $6.5 billion. They use these acquisitions and their strategies to integrate these various technologies into their own platform to bolster future growth. While the stock is trending down right now, it does have fantastic future growth potential if you look at the historical price chart for the company, and overall it's a fantastic business that has amazing fundamentals. So buying this stock at a discount could be a fantastic buying opportunity, which is why I currently own this stock, because I see fantastic future potential for this stock. Lastly, we have Beyond Meat, ticker symbol BYND, and currently the BYND stock price trades at $64 per share because it's pulled back recently. The low-end price target, according to analysts, is $45, the average price consensus is $72, and the high-end price prediction is $106 per share. This company also has a 10x price target of $656, and I personally think that is trading at a fantastic discount, which is why I also own this company, because I think this is going to be a fantastic future stock to own. This is a plant-based meat substitute company that produces plant-based substitutes for things like beef, pork, and poultry to, one, help reduce overall pollution, and secondly, to help people live a healthier lifestyle. Beyond Meat is a company that thrives on retail sales, and the future growth projections for the company are absolutely astounding. Their retail sales have accounted for around 74% of their total revenues, while their food services accounts for only 26% of the overall sales. Analysts have actually compared the margins and the lower costs of Beyond Meat to other very low-cost food producers such as McDonald's, and they believe that Beyond Meat actually can produce their product at a lower cost than what McDonald's can produce their food for, which is absolutely astounding. Millennials and Gen Z also believe in healthier lifestyle diets, so in the future, Beyond Meat is a fantastic growth company, and to me personally, I will have a 12-month stock price target for Beyond Meat of over $100, so I am extremely bullish on this company. Overall, we covered very safe companies to invest into right now despite macroeconomic factors. These companies have great growth trajectories, they can all potentially 10x according to this article, and some of them have fantastic dividends. But I want to hear your thoughts. Comment your thoughts about these companies, subscribe if you are new, remember to like this video if you haven't already, and I'll see you in the next YT video.